Hello, this is Brian Shannon from AlphaTrends.net. Today is Wednesday, the 26th of March, 2008. The market's closed, and the S&P 500 lost a little bit of ground here today, down about $1.20 or 0.9%. And again, we're going to point to the direction of the 50-day moving average. As long as the 50-day moving average is declining, you generally don't want to trust these rallies, as it indicates that the market is showing some short-term strength, but they typically resolve themselves back to the downside. The market will settle in and usually begin to correct more through time than the price correction that we've been seeing. Again, I want to point to the diminishing volume in here. And what happens a lot of times is when the market, gets hit hard on big and increasing volume, that we see rallies begin to materialize, and those rallies start to lose conviction from the buyers. The buyers is kind of are left unchecked for a little bit because the short sellers don't want to step in front of this strong momentum. So they basically step to the sidelines for a couple days. Let's see what the buyers have in store for this market, is what they're thinking. Where's their conviction? Let's see how strong they're going to fight at this 50-day moving average. And when the 50-day moving average, kind of holds the market back a little bit in that area, the sellers who are on the sidelines could come back in, and it leaves the market in a vulnerable position here. It doesn't mean the market will decline. That's the most likely scenario, though. As long as the 50-day moving average is declining, it continues to tell us that we want to treat these rallies as trading opportunities only. There's been some great upside here in this S&P 500 and the market overall, and it's encouraging to see that it came down to the 5-day moving average is where it's holding, at least for now. But it's also back below this prior level that we're looking at as potentially holding the market up, that had been so important as far as resistance, that it would have been nice to see it hold in there near that 134.5 to 135 level. Late in the day, you can see that it made a rally back up to 134.65. Buyers tried to take control right in there. We're looking at that 10-minute time frame, which we'll come back to in a minute. So they tried to take control here late in the afternoon, but that failed, and the sellers came back in, and it closed pretty much near the lows of the day. So the market, as far as the S&P 500 goes, yesterday I pointed out that on this 10-minute time frame, we saw a little bit of signs of indecision here with this moving average crossing back and forth in here, and more importantly, we saw the lower high rather. The lower high was the first indication that there might be a little bit further profit taking from this recent rally coming. And now we saw that the low from yesterday was taken out. They tried to get it back up above there, but it closed below. So this 134.60 to 135 will continue to be an important level, and I wouldn't be aggressive about buying this market until it can get back above and hold above that 135 level once again. It's kind of, the yellow light is flashing in here. It could go either way. But because the direction of the 50-day moving average is declining, and because we've still got this big mess on the weekly time frame, it tells me that there's a good chance that it will resolve itself back to the downside. So we've got to continue to be careful in here. Despite the encouraging signs that we're seeing, the market really is probably just turning more neutral in here. If we take a look again at the VWAP from the lows of January, that still seems to be holding a support in that 133.40-ish type level. So it'll be a hard-fought area, I think. The average price this year is right around 135. So still, the market's kind of taking a more neutral tone to it. And again, these short-term rallies will typically correct back to the downside as they, take the early buyers off guard, the people who proclaim a bottom every time the market sells off more than 5%. And then begins to rally a little bit. The most bearish action today was in the financials. This group, again, is in a primary downtrend, and there will be a lot of news still specific to that group, like we saw from Citigroup today. And this market, closed on the 50-day moving average 2 days in a row. That 50-day moving average is declining. It had a huge rally. This is just normal profit taking from that rally. We can't really call it a failure completely yet, but it looks like it's probably taking a more neutral look, as I've been saying in here. And when we look at the 30-minute time frame, you see that this group yesterday was the weaker one, and I said, breaking back below this 2620 level would be discouraging to the buyers, and most likely would lead to a pullback a little bit more significant, perhaps down to 25 and a half. And if 20, and just because we're at that 25 and a half level definitely does not mean it's time to buy. We've got this red, blue, and green moving average all turning lower, and the 5-day moving average is flattening out again. Once again, you need to see this market get back at least above, I think, this area here, 2630 is what we're going to call it. If the market can get above and hold above 2630 for a few hours, then maybe the buyers can come back in here. But again, we've got this very nasty downtrend in this group. We didn't see volume on the sell-off either, so a lot of discouraging signs. A lot of encouraging signs, and that just tells me that we've got a lot of mixed signals in here, and more than likely it means that this market needs to neutralize and basically trade sideways before it has any chance of recovery for more than just these short-term trades, which some of these short-term trades are fantastic. Obviously, there was some massive upside in here. The pattern of higher highs and higher lows was broken. We now have lower highs and lower lows, so it's back to guilty till proven innocent in the financial sector. The Russell 2000 IWM holds up really the best. The 68.5 to 69 level is what our best level of potential for support is if this market starts to pull back. We did also see that this market held above yesterday's low, so that's encouraging to see as well. That although in spite of the opening weakness we saw, it was it held above those lows. So this level takes on a little bit more significance, around $69.30 or so. If it breaks below that, then we could probably test that 68.5 to 69 level, and if that fails, well then we've got just a much more neutral market that's going to need time to heal. And that's the way it typically works anyways, is that we need some time to heal in here as this battle continues to get fought. We've got earnings that are coming out next week. Perhaps, again, this market is being held up just for the purposes of end of quarter window dressing, which is occurs last day of the quarter is next Monday. But real light volume in here. It's easier when we see the volume diminishing like that. It's easier for the primary trend to reassert itself. The primary trend is still lower. The 50-day moving average is starting to neutralize a little bit. The 10 is coming up through the 20, but that just indicates a more neutral market. If they don't scare you out on the way down, they will typically wear you out as the market needs time to heal. If, however, the market can get back somehow above this level in here at about 70.5, then again it puts that 72.5 level into play as a potential upside. So a lot of mixed messages. Again, the IWM holds up the best probably. The financials are the worst, then the S&P 500, and then NASDAQ was only down 13 cents or 0.3% today. So this market, you can see here that here we've got the obvious level near that 43.5, and then we have the 44.5, and 44.5 held once again today, which is very encouraging. The 44.5, remember, was the big resistance back in late February that led to the once the market couldn't push through that, it led to the larger decline, and then we've seen more recently that the 43.50 level has been the support. This market, the NASDAQ 100, also, like the IWM, didn't make a lower low today. However, this is the first significant lower high that we have in this market. So keep an eye on that. If we break below this level here at about 44.25, then maybe we're going to see a little bit further downside, a test of that 5-day moving average. But again, the primary trend is lower. That's just the way you have to look at it with this declining 50-day moving average. We're seeing some encouraging signs. This moving average crossing in here it indicates a more neutral market, but a neutral market isn't time to buy. It's time to do planning.